Joining us now is Gabelli Funds Portfolio Manager, the Gabelli Growth Innovators ETF, John Belton. John, great to have you with us.
Nice to be with you.
It doesn't sound like a great setup going into earnings season, given expectations and sentiment has so improved lately.
Well, at the same time, though, you just pointed out that these stocks have underperformed the market over the time frame you just showed. So I do think some strength in the first quarter has been pre-traded. Clearly, there's very strong trends, particularly across these cloud businesses. I think also the digital advertising companies are doing quite well. But I think, these are strong fundamentals, high expectations. Hard to say how stocks respond on day of earnings against that setup. But still looking longer term, I think these are pretty interesting.
It feels as if, the March 30 low, and maybe we could say the ceasefire in Iran coincided with this Mythos model getting out there. And it felt as if that just gave this accelerant to this whole move back to revive Mag 7 type stocks. Are we at a point now where you have to try to figure out exactly where this is ending in terms of winners on the AI side, whether it's just like all boats floated, there's enough cloud revenue to go around for everybody? Because the frenzy in the hardware side of things suggests that there's indiscriminate buying by those very companies we're going to hear from on Wednesday.
Yeah, no, I think it's a complicated picture, but I think Mythos is just one, recent catalyst for this space. I think what I'm frankly more excited about is the revenue figures I've been seeing floated for Anthropic and OpenAI, collectively now doing something like $70 billion of annualized run rate revenue, and that's more than doubled from the start of the year. That is direct AI monetization. That was the whole debate for this space heading into the year. I think this idea that these companies are spending hand over fist on infrastructure and not monetizing that infrastructure, that debate, I think, has been flipped on its head. And I think that's equally as important as the Mythos catalyst to me.
We know the demand for AI seems insatiable at this point, but at what point do you get concerned about just constraints, whether it be within the supply chain for the build out, whether it be power? I mean, we know that memory prices are skyrocketing. We've heard various, consumer tech companies talk about the increased prices and how it's going to have to eat into margins or be passed on. How should we think about that?
Well, yeah, I think there's a couple different ways to answer that. First of all, yeah, some of these companies are the losers in some of these bottlenecks, like Apple as an example. Higher memory prices, concerns that could be pressuring margins going forward. But, I actually think some of these bottlenecks and these supply constraints is a healthy thing for the industry. I think it sort of helps govern the pace of expansion and govern the pace of investment, and it's a much smoother ramp than it might have otherwise been. And I think that is long-term healthy for the space. It probably prevents massive overbuilding.
You want it to be throttled a bit.
I think it's healthy long-term.
Yeah.
And what do you think investors, it might vary by company, but want to hear about the Capex plans looking into next year? I know everyone wants to hear that there's opportunity and our revenue are ramping along with the spend. But, to your point, pricing's going up and everything. You're getting less per dollar of Capex, arguably.
Right. Well, so this is a first quarter earnings cycle. Yeah. So I think historically we haven't seen big changes to full year Capex outlooks at first quarter earnings cycle. So I do think the expectation is by and large Capex plans reiterated, maybe raised on the margin. I think the second layer down is, where is the Capex going? Is it going towards visible ROI use cases, or is it going towards more speculative R&D type use cases? And so I think companies are, again, going to have to explain that type of dynamic. But the big theme of this earnings season is going to be cloud revenue acceleration.
Which of the Mag 5, the ones that you cover, are you most concerned about?
Most concerned just heading into this earnings season specifically? Well, it's probably the company that I'm most optimistic about longer term, but I think that would be Amazon. I think Amazon, the expectations have clearly risen a lot there. I think the cloud acceleration that we're going to see seems like it's been pre-traded. There are some reasons to be concerned about what type of margins that they're going to be speaking to on this for the second quarter. There's some fuel cost sensitivity there. I think, it's a very big, complicated business, hard for everything to hit on all cylinders every quarter. But at the same time, longer term, I think it's just this great margin story for the retail business and a cloud business that's now accelerating at massive scale.
I think Andy Jassy was out publicly kind of embracing the restructured Microsoft OpenAI deal. Now they can sell OpenAI more directly. So it's almost being viewed to some degree at this point as an Anthropic play, right? Amazon, AWS. but I guess it can grow from there.
I'd say of the big cloud platforms, Amazon has the tightest integration with Anthropic. And then speaking of Andy Jassy, yeah, I mean, I think that we've seen that stock just take off since Andy Jassy published his annual shareholder letter earlier this month. So I think, again, like a lot of the strength there seems to have been pre-traded. But strong fundamentals, strong earnings growth, always good recipe for stock over longer time frame.